Yeah, hello guys. Good evening to you all. Good evening from my own end. Can you guys hear me? Hello, good evening. Let me know if you can hear me, please. Please let me know if you can hear me. Hello guys, can you hear me? Okay. Okay. Thanks for joining and welcome back to my live trading section. My name is Happiness Hanson. So you can quickly state your name and where you are joining me from. You can state your name and where you are joining me from, guys. You can state your name and where you are joining me from. Yeah, I can see Raphael. I can see Musin. Raphael from Enugu. You're welcome. So let me get to know. I think we have like 40 participants already. So just state your name and where you're joining me from. Okay. I can see Ebere Nicholas from Akwa Ibom State. Abdulazi from Nigeria. Miracle from Israel. You're welcome. Happiness Hanson here. I can see Sylvester from US. You're welcome. I can see Felix from Akwa Ibom State, Mika from South Africa. You all are welcome to today's section. So guys, a quick disclaimer. Any opinion, news research, prices, analysis, or other information discussed in this webinar or linked to this presentation is provided as a general market commentary and do not constitute investment advice. So guys, you're welcome. A quick intro about myself too. So if you've been joining my live section, you should be conversant with me already. So my name is Happiness Hanson, professional Forex trader with 4 years experience, trading coach and analyst. I trade the strategy I use to navigate through the market to my speculations. It's SMC strategy. That is also what we'll be looking at today, as we'll be analyzing the market together. That is also what the term we'll be using, the strategy we'll be using, which is SMC. I teach traders how to manage their money and find their trading style. Okay, someone is asking if I'll give a promo code. Yes, I'll give a promo code at the end of this section. So do well to stay till the end of this particular live section to get your promo code. So guys, for today, I'll be working with the suggestions in the comments. So if you have any pair you want me to look at, because I want us to go straight into the charts once we are done looking at the economic calendar. I want us to go straight into the chart and analyze as many pairs as possible and if there are setups that we can take, we can still go ahead and take those setups here and now. So if there's any pair you want me to analyze as we are going through the economic calendar, just do well to drop them in the comments, because I'll be looking at the comments to pick out your suggestions, and we'll look at those pair, any pair at all you want me to look at. Okay guys, as I'm waiting for your suggestions, let's quickly look at the economic calendar. Okay. So this is the economic calendar for today. So guys, the essence of this, let me refresh it. So why you need to always look at your economic calendar is for you to be aware of the news events coming out. Considering the particular pair you are looking at, you need to be aware of the news events coming out so that markets won't hold you or surprise you. Whenever high impact news is coming out, it tends to release spikes, and there are a whole lot of manipulations going on during that time. So it is important as a trader, whenever I want to start trading, or whenever I am ready to look at the chart, I start by looking at my economic calendar to know the news events coming out and how I need to react to those news events. So for what we have on the screen, you can see I filtered mine to just show me high impact news, and you can see what the news events that came out today. We had good number of high impact news today. It was more of statements, speech and conference. So looking at this, for most of you, for the newbies here that don't understand how to analyze news or how to apply news when trading, all you just need to do is, once you get your economic calendar, and you can see each of them shows the currency it is coming out on. So if you want to know what the news entails, all you need to do is to just click on it, and it will show you the details of the news and how you should react when it comes out, to show you the details. So that's just then for the statement. Once it is time, statements, or when it comes to speech, when that type of news is coming out, all you need to do is to just watch the market, because as the person is speaking, it tends to move the market. So now, if you don't trade news, it is advisable you stay out whenever high impact news is coming out. But if you trade news, then you should also know how to utilize the moment. So I can see a whole lot of solutions in the comments, more of GU. I see GU everywhere. It's like most of you trade GBPUSD. And I can also see gold. Let me find the first comment. So I can see the first comment from Felix again, and that is gold and GBPUSD. So, okay, guys, let's head straight to the chart and start with gold. Okay. I believe you guys can see my chart, right? So let's look at gold. Can you guys see my chart? Okay. So we are looking at gold first. If you still have suggestions, I can see more of gold, GU and GJ. We'll look at that. Then if you're just joining now, all you just need to do is just comment the pair you want me to look at. Then for the newbies here, if you're a beginner and you don't know anything at all about trading, I will just advise you just pay attention to what I'm doing. And what I'm doing now, I'm going to show you how I analyze the charts, break it down, and how I look at the charts and how we make money trading. So all you just need to do is to pay close attention to the section. Then for the advanced traders or the intermediate traders here, if you have any pair you want me to look at, it's in your own court to recommend or send in your own suggestions. While the newbies, you can just listen and grab the point, understand what is going on. What I'm going to do now, we are looking at the charts. So what you can see currently on the screen, they're just candlesticks. So I'm going to quickly explain how we make money by just looking at this chart. So that is what I'm going to explain today. Okay, question from someone: will you save the life? Of course, to be here, you can always come back to it and go through. If there's anything you didn't get, during the section, you can always go back to it. And also for the newbies, you can still go through Octa YouTube channel. You'll see some sections that we handled last time. It may not be from me, from other speakers too. You can still go through. The videos can walk you through. As a beginner, you understand the basics of trading, starting from what is Forex and so on. So just do well to go through the videos maybe after this section, but for now just pay attention. So from the recommendation or from the suggestions I have here, we are looking at gold first, which is what we have on the screen. So before I start analyzing gold, I'll quickly outline for those joining now or for those that are joining my section for the first time. If you've been joining my section, you should to an extent get to know my strategy and what we always use to bring out setups that we trade here, which is SMC. But if you're just joining for the first time, let me quickly explain the strategy we'll be using to analyze the market today, things I look out for. So the first thing I look out for if I want to trade, the first thing I look out for is, let's place it here. So the first thing I look out for is the market structure. That's the first thing I look out for. Let me adjust my mic a little bit. Okay, that's the first thing I look out for, the market structure. Then, which is, you're going to see the practical aspects of it here. So I get to pinpoint the direction of the market. Is the market moving upward or downward? Then after that, I look out for possible break of structure, which I am going to write out today as BOS. So that's more like the short form, BOS. So BOS simply means break of structure. That is what it means, break of structure, which I will also go to the chart and explain each and every one of them. So once I get break of structure, the next thing I look out for is the origin. The origin here is actually the consolidation before the impulsive movements that breaks the particular structure. So before a break of structure happens, there must be an origin where the momentum started from, and that is where I treat as origin. My origin is usually my POI. So what I mean by POI is where I am looking to take trades from. That is what I mean by GBPUSD, which is my origin. We'll still see that on the chart. Just trying to outline all the confluences I look out for. Then once I get my origin, the next thing I need to look out for is actually some other confluences that gives my origin more validity, which is we have liquidity zone, and we have imbalance. Excuse me. And we have imbalance. So guys, this is just it. This is what I look out for whenever I want to take trades. I just need to see this on the chart, and I'm going to explain that. Now, if you've been joining my sections, most especially the live trading section where we get to analyze the market together and trade, you will notice that I keep using one particular strategy, which is what I tell most traders. You don't need to use different strategies or jump from one strategy to another. Maybe you trade with this strategy today and you will make money with that strategy. You will now maybe the next day the strategy may give you a loss. You will now think that the strategy doesn't work again. You're not saying that the strategy doesn't work again and you move to another strategy. So it is good for you to stick to one, master a particular strategy with an edge. So how you get to know a strategy with an edge is the win rate. So if you're trying to use my strategy, or you've been following my live trading section and you've been using my strategy, I will advise you do more of backtesting so that you understand everything the strategy entails, and know the win rates of the strategy before you apply that in your live account, and know if the strategy suits you. That's what you need to understand. So these are the confluences I look out for. The first thing is market structure. So we're going to go down to the daily time frame. If I want to read the market structure, I don't just open the chart and start trading. I will start reading the market structure from the from the higher time frame. Sorry guys, I will start reading the market structure from the higher time frame. I will use that to get my bias. Then I'll go down to my entry time frame. So my entry time frame is 15 minutes. That's my entry time frame. So, but before we start looking for setups, let's get to know the general bias of the market today on gold. Let's know the general bias on gold. Okay, we actually analyzed gold sometime last week, when I stated that gold was more like consolidating and we need a breakout following the trend. So guys, from what you can see on the screen, let me know. This question should be for the intermediate traders or the advanced traders. From what you can see on the chart, what trend do you think we have currently on gold? What is the trend on gold? We are looking at the daily time frame. So guys, what is the trend on gold? What trend do we have on gold? We're looking at the daily time frame. So when we are looking at the market structure, we want to understand the trend currently in the market. We want to understand the trend, whether the market is pushing up. When the market is pushing up, this one is for those that don't understand, the market trend. When the market is pushing up, the movement, the candlesticks pointing upwards, pushing up, it simply means that we have an uptrend. And when the market is pushing down, it simply means it's a downtrend. And there are times markets will be given equal movements, sideways movements. It simply means when it's given sideways movement, it simply means that the market is ranging. And following my strategy, I keep saying this so that you won't use my strategy when the market is ranging. Whenever the market is ranging, that is no direction at all. Whenever the market is ranging, you stay out until you get a breakout. My strategy works more when there is a direction in the market. So if there's any pair you're looking at and the market is ranging, now this is what I mean by when market is ranging. If the market movement is moving like this, even equal movements, equal highs and equal lows, that simply means there is no direction. There is what is currently happening now is more like a break or more like a fight between the bulls and the bears. So we need to get a breakout either to the upside or to the downside to start trading. So whenever the market is ranging, just stay out. Don't try to force trades. I advise this following the strategy that you have. If you look at the chart and you are not seeing your confluences, all you just need to do is stay out and patiently wait for market to give you what you're looking for. You don't need to force it. Even as we are having this trading section, we're going to analyze so many pairs, and from our analysis, we look out for possible setup we can use and make money together. In a situation where we don't see the setup, we don't need to force it out, guys. We don't need to force it out. All you just need to do is understand the strategy and use that, to fetch money for yourself when looking at the chart. So I can see your answers, the comments: uptrend, 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 uptrend. Okay, there is no doubt gold is actually bullish from what we can see here. Gold is bullish. Looking at it from this swing low here to where it is now, you can see where gold is at. Gold is bullish. After this consolidation, you can see it has cleared the most recent high. So we already have a break of structure. We already have a break of structure here on gold, looking at the daily time frame. So if we are to take a point of interest on gold, now I just explained the first one, which is a break of market structure. Now, if we are to point out a break of structure, this is what break of structure means. This is what break of structure means. We'll just be using the chart to explain everything now. A break of structure simply means when the market clears out a high. So you can see from what we have here on the chart, you can see, let me move this. From what we have here on the chart, you can see this, this rejection here, this reprojection here. So you can see market just passed that particular level. That is a break of structure. So for market to pass that particular level, it is a break of structure. I'm going to map it out as a break of structure. It's a break of structure for market to pass this particular level. We have this particular break of structure here. Then we also have this particular level here. We have this. Now these levels, you can call them support and resistance level. Now you can see after market rejected from that level, it triggered a sell. That is why it's a key level. It's a key resistance level here. And we also have another level here. So I'm trying to map out all the break of structures we have on the chart. So you can also see this level. After market rejected from this particular level, we got a sell to the downside. We got a sell to the downside, and which is also a break of structure. So you can see we have a break of structure. And how you get to know the direction is once you see the market is breaking structure to the upside, then it is a bullish trend. If market is breaking structure to the downside, then it is a bearish trend. So you can also see from here, we also have another structure here. After price rejected from this particular level, to push down, you can see market still cleared it out to the upside, which is we have this break of structure here. So this is what I mean by break of structure. So guys, you can see from the list of confluences I've explained market structure and that of break of structure. So we can continue to line them up. We have a whole lot You can see market breaking structure, clearing all of them to the upside, which shows that we have a bullish momentum. Which shows that we have a bullish momentum. Someone is asking if this is for day traders. So guys, I'm a day trader, and for my strategy, if whether you're a day trader, swing trader, or however your trading style is, this strategy works for all of them. It works for all of them. So for swing traders, if you're taking your entries from 4 hours or 2 hours, you can still follow the same process of, the confluence is listed here. Then for day traders, same thing. The only thing that will change it is more like the time frame, your entry time frame. For me now, as a day trader, my entry time frame is 15 minutes, which is where I take my entry. So as you can see, I am analyzing, trying to get the structure from the daily time frame, which we are seeing now as bullish. So if I'm trying to get a setup, or if I want to take trades now, I'll have to move down to 15 minutes time frame to look out for possible setups following my confluences to take trades. So back to my explanation of break of structure. So guys, you can see how we have it all outlined here. Break of structure to the upside. So that simply means gold is bullish. So let's review this from the 4 hours time frame. Let's review this from 4 hours. So you can see what we have here from 4 hours time frame. Now, looking at the confluences I listed, we now understand what break of structure means and BOS. Guys, if you also have questions concerning these explanations, you can still go ahead and drop in the comments. I will go through that during question and answer section. Now, the next thing we need to look at is the origin that caused the break of structure. Now, when looking at the origin, remember I stated that origin is more of my point of interest. So point of interest simply means where I am looking to take trades. So guys, you can see before these movements, you can see this massive movement here, or I can call it impulsive movement here to the upside, clearing out this high. Before that movement, you can see that we had consolidations. Then after that, there was a breakout. Remember when I was explaining sideways movements, which is what we have here, market giving equal heights until we got this break to the upside. So this consolidation that happened here is what I call the origin of the impulsive movement. Now, origin, just as the name implies, simply means where did the movement start from? Where did it emanate from? So that is the origin. So when mapping out the origin, you don't need to map out all the consolidation. That is now when you refine it to your order block. Now, refining it to your order block simply means you have to look at the last candlestick before the impulsive movement. You have to look at the last candlestick before the impulsive movement. So this is actually the last candlestick out of all this origin, this consolidation that happened here. We'll look at the last candlestick before the impulsive movement. So guys, you can see after this particular bearish candlestick, this black one here, let me zoom in so that we can all see for those watching with their phone. So after this particular candlestick, we got this impulsive movement, and after that, the movement continued to the upside, clearing out this particular high. So that is going to be what we are going to measure. Now, looking at the last candlestick, the last candlestick is actually what you will use to map out your point of interest. That's what you will use to map out your point of interest, which is you measure from the opening to the closing, then you extend. From the opening to the closing, then you extend. So mapping this out, this is my origin and my point of interest. So it is my point of interest because once I get this break of structure, we all know that markets cannot just be pushing up, without any form of retracement. So we already know the market movements that it will push up, there will be a slight retracement, then a break, it will come back to the origin and push up again. So that is exactly what I am expecting now on gold. Now that we have this impulsive movement to the upside, clearing out this high, and we've gotten this particular origin here. If I'm to, we are mapping out this origin from 4 hours. So if I'm to take an entry from 4 hours, I'll have to patiently wait for market to get into this particular origin. Then I will buy to the upside again. I'll buy to the upside again. So since we don't take entry, this particular POI, it's for swing traders looking to take this trade. This particular POI is for swing traders looking for when to enter or entry. So this entry should be for you. Whenever market gets here, you can get in, because we are likely going to see a new entry from my entry time frame. Different time frames, the higher time frame gives a summarized movement of what is going on, while the lower time frame is more of noisy movement, what is happening within few minutes or few seconds. That is what is happening in the lower time frame. So that's why the entry may differ, but we'll keep moving from one time frame to another. So we are looking at the 2 hours time frame now. We still have same setup from the 2 hours time frame. We still have same setup from the 2 hours time frame. Now, from the confluences I listed, once you map out your origin, we also have what I call the liquidity zone. Now, that is what I'm going to explain now. What do I mean by liquidity zone? Now, liquidity simply means where money is sitting on the chart, where a trader, any trader out there, is likely going to see and decide to place trade. Levels where traders can see and decide to place trade. So I'm just trying to break down the explanation in a way that both the newbies and advanced traders will understand what I am saying. So looking at if you understand what support and resistance level is, so let me just use that as an illustration. Let me use this as a support level, and I will use this as a resistance level. Now, support level simply means where a downtrend gets to and finds it difficult to break. So that turns to support. And for support and resistance level traders, what they do is once market gets to support, they buy, because that is more like a block to a downtrend. So in a situation where price is pushing down and it gets to a support, it tends to trigger a buy. So that's actually the essence of support. And where price gets to support and breaks it, it will no longer become support. It will now turn to resistance level, which is strategy for break and retest traders. So in a situation where a key level breaks, they will just wait for retest and they will keep taking it to the downside. So that is for support level. Now, if we are looking at resistance level, it's more like the opposite of support, where if the bullish momentum, it's coming up, there is a level it will get to and it will find it difficult to pass that particular level, and there will be a retracement to the downside. So for support and resistance level traders, they use resistance level. Once price gets to resistance level, they sell. once price gets to support, they buy. Now, this is what I mean by sell and buy. Selling, when you're trying to sell in the market, that simply means you want price to reduce. That's more like the literal meaning. And if you're trying to buy, that simply means you want price to increase. So that is it. Now, for those trading with these concepts, obviously, if they are looking at the charts, there are a whole lot of key levels scattered around. If they are looking at the charts, for support and resistance level traders, he can decide to take trade from this level. They can decide to take trades from this level. This is also another support level. Now, we'll be getting more of support because this is a bullish trend. This is also a support level. This is also, okay, I think that is all. Even what we have here, it's more like a demand zone, support level 2. So all these levels, traders will be looking out to buy from this particular level. So once price gets here and traders, place trade at this particular level, that simply means they are putting in money into the market. So just know that whenever you are trading, once you place trade in your account, you are putting in money into the market, and that is creating, liquidity in the market. So liquidity gives the market more momentum. So why I add that to my conferences is, I need market to sweep all the liquidities present on the chart before it taps into my zone. Because once I map out my zone and there is no liquidity for the market to sweep, to tap into my zone, that's my zone can turn to liquidity, and that is when you'll see market will sweep me out, stop me out, and then move to my direction. That can be frustrating. So before I take my trades, or that's why I said this, the liquidity, I use liquidity to know how valid my POI is. That's what I use liquidity for, to know how valid my POI is. So I need market to sweep all the liquidities present before tapping into my zone. So that's why I will not be looking at, or I will not be, planning or thinking of trading from this particular level and this level, because I'll be treating that as liquidity zone. You can see once market clears out this particular level, once it gets here, there is no other liquidity for it to sweep. So there will be no other option than to start pushing to the upside, and that is when your entry can trigger sometimes no drawdown at all, and it will just start moving in your direction. So that is what liquidity means. I just used key levels, support and resistance level, to explain liquidity. We also have that of trend line and chart patterns and the rest. Then the next one we have on the list is imbalance. Imbalance, this is also another conference I need to see on the charts, which gives my origin more validity. So when I talk about imbalance simply means the gap price creates on the chart. Now, if the market is moving, equal movement is expected from both the bulls and the bears. Equal movement is expected from both the bulls and the bears. So in a situation where an unequal movement occurs, that simply means there is an imbalance. So most SMC traders will call it FVG, that is fair value gap, and inefficiencies and the rest. So let's get the example from the chart. Now, looking at my POI, that is my origin, you can see that the candlestick that we measured to map out this origin, you can see after this particular bearish candlestick, we got this bullish candlestick. You can see how massive the movement is. After this particular movement, it closed, and after the closure, other candlestick opened, and from there it started pushing to the upside, leaving this gap. You can see where it closed. it closed here. Now for it closed there, then the last candlestick before this longer one opened closed here just at our entry. Now we have this gap here. This is what we call imbalance. Now if the movement is meant to be equal, it's expected that after this bullish momentum we get a bearish momentum that will cover up the gap and still push to the upside. That is when you get equal movement. But where there is an unequal movement, that is when we get to see imbalance. And you can see this particular imbalance is very close to my origin, which is giving my origin more validity. So when we are looking at imbalance, we don't need to pay attention to all the imbalance we see on the chart. We only pay attention to the imbalance we have that is very close to our origin, that is our point of interest. So once you have all these things intact, you can see we have that intact on this particular push. Once we have all of them intact, then we can boldly and confidently take our trades without any hesitation. Now I know most of you watching here may be having issues with once you do your analysis, following your strategy, you do your analysis, you may find it difficult to place your trades just because you don't trust your strategy yet or something of that nature. That's why I said any strategy you are looking to work with, you just need to start off by backtesting it to understand how to use the strategy, all the processes, the nook and crannies of every strategy. You need to understand it before you start using the strategy in your live account. You don't just get to know a strategy today and start applying it in your live account without you understanding if the strategy works for you as a trader or not. Because there are a whole lot of strategies out there, so not all may be suitable for you. The strategy may be working for me, may not be working for you. It may be working for another person, may not be working for me. So that's why you need to understand the processes of each strategy and know if it suits your personality and your trading style. So back to our conferences. So we have everything intact. So if price gets to this level, I am not going to hesitate to place my buy. We'll take a buy from this particular level on gold. From this, you patiently wait for price to get here and we'll take our entry on gold. Now, if you also want to catch the correctional movements, let me explain how you can catch the correctional movement. For most of you that may be asking, are we going to wait for all these movements? Why don't we catch the sell and buy? If you want to trade or if you want to catch the sell now, from what I'm seeing on the chart, we are still working with my confluences. So from what I'm seeing on the chart, gold is not ready for a sell now or a retracement. So we can only start thinking of selling gold or joining the correctional movement if we get a push to the downside that will clear out this level here. If we get a push to the downside that will clear out this level, we need this level to be taken out because this is more like the most recent level or origin that gave out this break of structure here. So if we are waiting for a sell on gold, we need a shift in market structure, which is a change character. We need a shift in market structure. Once we get that shift, once price breaks this particular low, we'll now look out for the origin that caused the impulsive break to the downside and wait for a retracement, join the sell. We'll take our profit here and buy at the same time. So that is when we'll be selling to buy. That's what we'll be having on gold. So this is the higher time frame. We are looking at 2 hours now. This is the higher time frame POI. This particular level, let's pay attention to that, guys. Once price gets here, we are buying gold. Let's still look at it from 1 hour. We still have same POI from 1 hour. So if you are with your phone, you can just take a screenshot, or at the end of the day, you can still come back to the video since the entry is not now. So this is going to be more of a pending order. Since we're not getting it now, it's not an instant execution. So this is going to be a wait on gold. Need to patiently wait. Looking at the 45 minutes time frame, we still have same POI. So let's look at our entry time frame, which is 15 minutes. So that's our entry time frame, 15 minutes. So you can see we have more of consolidation here. So maybe from 15 minutes, if we get retracement to the downside, clearing out that low, this low, we can catch the correctional movement all the way down to our POI. Now, this question may come up: what if price doesn't get to our POI? You just need to work with what the market, wait for the market to act, then you react. You just need to always follow the price action and the structure of the market. So in the situation price doesn't get to our POI, all we just need to also look out for is for price to give out another momentum, a break of structure, and we'll still join with the most recent origin. But for now, we don't have any of that. We have a consolidation that may trigger a push to the downside. But for now, no confirmation yet on gold. But this is what we are looking out for, guys. So you can take a screenshot with your phone. We just need a retracement into this level and buy gold. That is what we are looking at for gold. So guys, I used this particular analysis to explain everything concerning my strategy. So we'll quickly look at other pairs that were listed. The comment, we'll look at them and I will just be analyzing them following what I've already explained. So let's quickly look at GBPUSD. Let's look at GBPUSD, as I saw that in the comments too. So let's view GBPUSD from the higher time frame. Looking at GBPUSD, guys, from the higher time frame, we are also getting a bullish momentum on GBPUSD. We've had this particular consolidation here for the longest time, but now we have this push that is about to clear out this level. So from GBPUSD, we've not gotten the break of structure yet, but this momentum is likely to give us the break of structure that we need. This particular momentum here is likely to give us the break of structure. So for now, GBPUSD is ranging from the daily time frame, So we need the direction. Now looking at it from 4 hours, we can see the bullish push that is coming up, but it's still inside the consolidation. So guys, for GBPUSD, I don't think we have a direction yet, so I wouldn't want to force it out. Let's look at it from our entry time frame. Okay, from our entry time frame, we can catch a short-term setup there. We have this, a break to the upside, break of structure, guys, to the upside. So after the break of structure, where is the origin, the cost, the break of structure? So guys, this is the origin. We have this particular origin here. We're going to map it out. We're waiting for GU to get here. Now this level, because I know most of you may be asking, why didn't I map out this particular level as my origin? This level is a liquidity zone, so it's going to serve as liquidity zone for this trade, and you can already see all our conferences intact here. So we have our FVG, which is in balance here. So guys, this is the setup. This is a short-term setup on GBPUSD. So last week we were able to get the last time I had my trading section, we were able to get instant execution trades, but this week we are getting more of pending orders. That is good. So for this trade, we will be risking just 18 pips to catch 58 pips. So all we just need, guys, is to patiently wait for this retracement here to the downside, and then we'll buy. So this is a pending order, guys, on GBPUSD. It's a short-term momentum. Remember, from the higher time frame, we have more like a consolidation. So this is more like a short-term trade on our entry time frame. So guys, you can take screenshot of this particular setup and take screenshot of this particular setup. This is what we have on GBPUSD. Can take a screenshot. So you can see the coordinates of this trade. Our entry price is 1.27371. 1.27371. That is the entry price. Then stop loss, which is 18 pips away from our entry price, is 1.27186. And our final TP on this trade, which is approximately, let's leave it at 60 pips. So let's leave it at, this is going to be 1:3 risk to reward ratio trade. So let's leave it at 60 pips, and the coordinate for the profit level is 1.27971. So that's what we have. We just need to patiently, you don't need to start buying now. There is no reason to buy now from what we are seeing on the chart. We just need a slight retracement to the downside to tap into this zone, and we join the buy. So that's the setup we have on GBPUSD. So let's look at GBPJPY. I guess that's the, let's look at GBPJPY. Saw that in the comments. So after that, I will just answer the questions in the comments. Just get into question and answer section, and that will be the end of today's section. So let's view the trend on GBPJPY. So from what we have here, I don't need to ask. It is obvious that we have a bullish momentum on GBPJPY. We have a bullish momentum on GBPJPY here. So let's head straight to our entry time frame to see if we have possible buy setup on GBPJPY. So from what we have here, there's no reason to start buying from this particular level on GJ. We have this break. So from the 15 minutes time frame, we're having a bearish momentum. Then after that, we've gotten a change of character at this particular level. That's a shift in market structure from bearish to bullish. We have this change of character here. We have this change of character at this level. Market just cleared out this origin that caused break of structure to the downside, and it is pushing up. So guys, I wouldn't want us to go into, take a buy from this particular level. I wouldn't want us to. If we are taking a buy from this particular level, this is going to be our stop loss just a little bit below this level, and we push up. We'll take our profit here from this zone. Take our profit here. So it's going to be, we're risking 24 pips to catch 100 pips on GJ. Okay, looking at it from 5 minutes, you can see after this consolidation, we have a break and price is back to the origin. So from 5 minutes, it's a valid entry for us. We have this tiny break of structure here. So we have a valid entry here on GJ. So this one, it's not a pending order, it's an instant execution trade. So our stop loss, we're just watching this origin. Our stop loss is just a little bit below this origin. So we're expecting a buy continuation, after this impulsive movement. Expecting a buy continuation from this origin, but in a situation price clears this origin, take us out. So this is what we're expecting. This is also, it's a 1:4 risk to reward ratio trade. So if you can place your trades, if you're with your phone, your trading account here, so you can take a buy now. From my own conferences, you can take a buy now. Apply proper risk management though, guys. Apply proper risk management. You can take a buy now on GBPJPY. So we'll be looking at it. We'll be looking at our trades as I'm answering the questions I have in the comments. So if you have any questions, you can quickly drop that now. I'll be wrapping up soon. So let me quickly answer the questions I have in the comments. So I have a question from Mayor Sunday. He said, please, what is the time frame to look out for as day traders? So if you're a day trader, you can see what I've done here literally. So if you're a day trader, it's advisable whatever you want to take trades. You first of all head straight to the higher time frame. You're not going to the higher time frame to take entries from the higher time frame. You are going to the higher time frame to understand the price momentum, the market momentum. You want to get the direction. Is it pushing to the upside or is it pushing to the downside? So you don't just open the chart and start trading. You need to understand the full story of what is going on in the market, and then you take your bias as a trader. So once you're done, understanding the story from the higher time frame, you will now move down to 15 minutes. I'm a day trader too, so 15 minutes is my entry time frame. So 15 minutes, sometimes I look at 5 minutes, but it is more of 15 minutes. That is where I take my entries from, which I've done the practical aspects here, even as we have this trade we are looking at now on the screen, which is a buy on GBPJPY. So if you're a day trader and you're looking out for entry time frame, you should be looking at 5 minutes, 15 minutes, and 30 minutes. That is it. Okay, question from Abdul Aziz. Say, what is the entry? The entry price on this trade is 189.43. So the price is still at the entry price, no much movement. Price is still at the entry price. So if you're not in, you can still get in now. Our stop loss is just 24 pips away, and we are targeting this level, that's 100 pips. So if you're not in on this trade, you can get in now on this particular trade. You can get in. Then our stop loss 189, you can see it here. You can see it here, 189.195. So that is our entry. Okay, I have question from Batot Forex just came in, so I'll answer that. Let me answer that of Chijoke John WC. He said, at what level do we take or place our stop loss? Now, from what you can see on the charts, thank God we have a running trade here. So we'll use that as an example. So you can see, I'm looking at this consolidation here, which gave out this tiny record structure here as my origin. So remember what I told you guys about origin. Origin is more of my point of interest where I'm looking to take trades. As I mapped it out, market was already reacting to my origin, and that is why it is an instant execution. Now, since I've mapped out this origin, I map out my origin by looking at the last candlestick before the impulsive movement that broke structure. Now, once I map out the origins, your stop loss is meant to be a little bit below that origin, because in a situation, if price should go against us, if it should clear out this particular origin, then that simply means we are wrong on this setup, and price should stop us out. Because if you're looking at the setup now, there's no other place you need to place your stop loss than a little bit below this origin. Because if price should clear out this origin to the downside, that simply means we have a shift in market structure, and there's possibility that the correctional movements can come all the way down to this level. So when placing your stop loss, it should be few pips, more like 5 pips below your origin when you are buying, or above your origin when you're selling. I hope that's clear. So from Battle Forex, he said, what do you do when you have 2 valid POI? Okay, let me quickly explain that. Then for Abdul Aziz, he's asking what is the take profit of this trade. We are looking at 190.455. It's 100 pips take profit. We are looking at 100 pips on this trade. So please apply proper risk management. Don't over leverage. Watch your capital before placing the trade. Know the lot size to take. So that's the coordinates for the TP, 190.455. 190.455. So for Batot that asked, what do I do when I have 2 valid POI? So let me use this illustration. When price is pushing up, we have a break of structure to the upside. Now, following our strategy, once we have this break of structure to the upside, we will actually be expecting price to get to this level for us to join the buy. But now this is Bartok's question. He's asking, what happens when price does something like this and we have another break, and let's say maybe another break? So now looking at this now and following our strategy, we have 3 possible POIs that we should trade out from. Now, if you are in this situation, what will you do? That is Bartok's question. So now there is something called inducement when you're trading SMC. Now, inducement simply means when there are a whole lot of POIs on the chart. Now, inducement is there to distract you or maybe deceive you into taking trades from let's say a fake origin, or more like a liquidity zone, because inducement creates liquidity. So when you have different POIs all lined up. All you need to do is to apply your fib retracement level to know the discount pricing and the premium pricing. I will apply that now, and I will send out the settings for my fib so that you also use that. Now, once you have that, all you need to do is to apply your fib level like this. Now, if you apply your fib level, you can see the different levels we have here. You can see we have level 0.5, level 0.61, and I have level 0.79 here. So once you have all this type of POIs lining up, once you apply your fib level, you just need to look at the POI that is closer to level 0.79. Other POIs at level 0.618 or level 0.5, you should look away from those ones because they are likely going to be an inducement. And what I mean by inducement, they are likely going to be the liquidity price needs to sweep to tap into the valid POI. So once you apply that, you look out for the POI that is closer to, it can be at the 0.79 level. It can be below it, or it can be a little bit above it. But once it is very close to 0.79, that is the POI you need to work with. So once you have this type of movement, you need to work with the POI very close to 79 in a situation once price is coming, because if you can take trades from this level and price will stop you out, clear out the liquidity, come here, maybe trigger, give you hope that is pushing to your direction, clear out the liquidity, then tap into the main liquidity, the main point of interest, and then push to your direction. So that's why you need to apply the discounts and premium pricing. So for the settings of the fib, you can take a screenshot now. You can take a screenshot now of the settings so that you can have yours like that too. So that's a screenshot, and have yours like that. Okay. Someone is saying the POI, this POI thing, don't confuse me now. Okay, you can, at your own leisure time, you can come back to the video to understand, or you can also check my other live sections. You also see how I map out my POI. With that, you will perfect it. So if you're on this trade, you can see we are a little bit in profit. How many pips profit here? Just 5 pips in profit. That's what we have currently on this trade. The movement is just starting. So let's hold on to that. So I'll just take maybe 2 more questions, and that will be all. So before I take the 2 other questions, guys, if you are following me on IG, you should know the last announcement I made about our live trading section. So the next live trading section, which will be coming up on my next live trading section, will be coming up on the 13th of this month. That should be next week. And it's not just going to be me, like you're seeing me here all alone. So that trading section, you're going to have 2 other traders, trading pros, to joining us, which is my colleagues, that is Ambrose Ebuka and Tomise Ololua, on the 13th. So that day we'll be sharing different trading concepts for you that will help you as a trader, whether you're a newbie, advanced trader. That day we'll be sharing 3 different strategies, because we're going to have 3 different traders, and obviously we are not trading the same strategy. So you're going to be learning 3 different strategies that day to, pick one for yourself and start your trading journey without wasting time. So guys, don't miss that particular section on the 13th of March. Don't miss that section because it is going to be, a very interactive section with you guys, and there will also be raffle draws and the rest. So you may also win, capital for yourself as you're learning strategy. You're also getting the capital you can use to start your trading immediately. So don't miss that particular section on the 13th. So set your reminder. If you've not, subscribed for or booked your own slots for the section, you can go straight to my IG page and click the link I have there in my bio to book a slot for yourself so that you won't miss out on that particular section. After the section, for those that signed up for the section, you're also going to get certificate for participation and so on. So guys, there's a whole lot, so you shouldn't miss out on that section. You should not guys. Okay, let me just take 2 more questions and I will end the section for today and see you guys on the 13th. All of you here, I want to see you on the 13th for that live trading section. You're not just going to see my strategy, you're not just going to hear from me, you're going to hear from 2 other trading pros that are doing well too in the industry, and you get to pick a strategy for yourself. So if you I will not miss that. I will not miss that. So I think we have a question from, okay, sorry, I cannot pronounce your name, so I will just read out your question. It said, if I want to take the sell call in gold for 2160 target, then can you please explain exactly at what level I need to put my sell call and what should be the SL? Okay, I guess we'll have to look at the gold chart again before I end this section. Okay. Any other question before we go straight to gold charts? Okay, we have question from Jubri Moore. I'm trying to answer those that dropped their questions since and I've not looked at it. So for those just dropping now, you can join. I don't know if it has been dropped in the comments, the Octa Telegram link. You can join the Telegram link where you can, ask your questions and you also get answers there. You can interact more there. Drop it. I don't know if it is in the comments. I guess that will drop soon, the Octa Telegram link. You have to just click on it and join the Telegram group. Maybe we can continue from there. So, question from Jubrima, please, which of the POI should I follow to take trade from? Is it order block from higher time frame or lower time frame? It all depends on your trading style and the type of trader you are, whether you are a day trader or a swing trader or something of that nature. So if you're a day trader, you should be looking to take trades from lower time frame POI and not higher time frame POI. If you're a day trader, you should not go to 4 hours and be waiting for entries. You should come down to the lower time frame POI. You should understand what day trading means. Day trading simply means you are placing trade to utilize a reasonable amount of movement and then close it up. While for swing traders, they are willing to swing the trade, hold on to the trade for weeks, sometimes months. So it all depends on the type of trader you are. So if you're a day trader, come down to the lower time frame and look out for trade the POI, the lower time frame. Then if you are a swing trader, you go over to the higher time frame and look out for POI from the higher time frame. So guys, check the comments. You can see the Telegram link there. So click the link to join the Telegram group. the group, you can drop your own setups. There are discussions going on there. So if you are not there, you can join the Telegram group now. Join the Telegram group, guys. I'm there. So let's just look at gold to answer the last question. So I actually explained this, but I guess you didn't get it. So let me use that to wrap up. So if you're trying to sell gold from this level, although gold is not ready for a sell from what I'm seeing currently, from what I'm seeing on the chart, there is no sell confirmation. There is no sell confirmation. So gold is not ready for a sell. But if you're trying to sell, I explained that you should wait for market to break this level. You should wait for market to break this particular level here. Now, if price should break it, following our strategy, if we get a push to the downside to break this level, that simply means that we have a shift in market structure, which is what we call change of character. Change of character. And when there is change of character, this is more like a break of structure to the downside, just like we've been seeing break of structure to the upside. If price should move down, we have a break of structure to the downside. And if the break of structure to the downside happens, whenever there is a break of structure, what do you look out for? What do you look out for whenever there is a break of structure? From what I've been saying, if there's a break of structure, what you look out for is origin. What you look out for is the origin that caused the particular break of structure. So you map it out as your point of interest, wait for retracement into that zone, and then you sell from that level. Your stop loss, just like you asked, should be a little bit above your origin. You can see the last week rejection that we have here. That will be where your stop loss. That will be where you should place your stop loss. So guys, before I end the section, let me just ask my own question for those that have been listening. So it's just a simple question, one question before I end this particular. So if we have a break of structure on the chart, let me know those that have been following. If we have a break of structure on the chart, what is the next thing we need to look out for? From this confluences I've explained, I just talked about it here. If you're looking at the chart and you've gotten a break of structure, what is the next thing we need to look out for? What is the next thing we need to look out for if there's a break of structure? Let me get your answers before I end this section. If there's a break of structure, what is the next thing you need to look out for? I've been answering your questions. Now it's time for you guys to answer my question. It's time for you guys to answer my question. So if there's a break of structure, what is okay? Felix just answered me. That is good. The origin for a retracement for the trend buy. Okay. Origin. Okay, nice. Nice origin. Okay, I can see that. Okay, that is beautiful. So for those, if you joined late to this section, just do well to go back to the video. You can start from the beginning to get everything I've stated here and understand the strategy, backtest it to know how everything works before you start trading with it. So guys, thanks for joining, and do not forget 13th we'll meet again guys on the 13th. So thanks for joining for now, and have a lovely day ahead. Bye.